Mind mapping the impact of the Trump presidency on stock prices. So, if we first look at interest rates, Trump is pretty much on record saying interest rates are artificially too low. So, the expectation is interest rates are probably going to increase. And what's the impact of that? It's probably going to lower or increase borrowing costs, which is going to decrease profits and ultimately decrease stock prices. The thing about interest rates is that it takes about 18 months for an interest rate hike to impact. So in the short term, maybe no change. Now, the other side of it, higher interest rates is it'll increase the value of the U.S. dollar, which will decrease exports because they're more expensive, which decreases profits, and over a long period of time will eventually increase lower stock prices. Second element is trade. Now, Trump has said he's going to be adopt a more protectionist approach, which is in the short term going to preserve jobs and increase jobs, which should increase, GDP and the outcome. But the problem with developing a protectionist policy is that over the long term, it creates inflation as prices for goods go up. And if prices go up for goods and inflation goes up for goods, that's eventually going to lead to interest rates going up. And ultimately, that's not good for stock prices in the long term. In terms of government spending, Trump has said he's going to adopt pretty much a guns and butter type of approach, which is basically increased spending on infrastructure and defense, which should increase jobs and ultimately increase GDP and profits and stocks. But the problem is it's short term. And so eventually the spending is going to stop and eventually the stimulus will decrease. So if we're to look at all this from a short-term and long-term impact, the short-term impact is it's going to be create a bit of a stimulus, which should put a bump up in stocks. But the long-term, it ultimately is going to create a downward pressure on stock prices.